Hey everyone, this is our weekly Precision Markets office hours with your Precision Markets coach, Brian. We host these every Tuesday at 12 o'clock p.m. Pacific Standard Time, GMT -7 during daylight savings times hours. And we host this to be able to have a forum to answer any questions that you may have. So this is your first time for joining in. Our format is you ask any questions within inside the chat. We'll go through the questions in the order that they received, and then I'll go ahead and answer them and then provide feedback. If you want to share a screen, share a chart, want to talk about the setup that you may, or trade you may have taken, you want to talk about any concepts or even review trades or even analysis, this is your time. So I'll let people go ahead and begin by sharing their questions, and then we'll start. So let me know, guys, if y'all have any trades y'all want to look at, pairs you want to look at, y'all want to discuss fundamentals, because that's been something that's kind of tightened up over the last week or so. But gosh.
Yeah, it would be nice to go over some fundamentals for EU especially.
Yeah, well, let me pull up something real quick, guys. I don't know if y'all saw the commentary I gave today. Trying to make it a daily thing to just go in and talk about the news releases that we see and just kind of talk about, what things we see upcoming. Let me know when y'all can see Forex Factory.
Yeah.
Awesome. So some key things that happened today that I thought were interesting was the Spanish flash CPI came in, and basically CPI is a consumer price index. It measures the cost of things from one year to another, month over month. It came in lower, and this after the United States came in lower. This is the second country that came in lower, and so usually when it's less, that means the economy is actually doing better, because we want a forecast that's actually less than actuals that are less than the forecast, not greater. You want the inflation to come down. So right now, inflation came down. That gave Europe a boost. We also had preliminary German CPI, which came in basically at forecast. Prices are still continuing to go up in Germany. So CPI measures a bucket of things like car sales, food prices, a couple, I can't forget, and then like gasoline and some other things. So it's really like what you call your headline inflation. Now, we had the jobs report that came in. Jobs came in strong for the United States. They had a forecast of 10.3 million, came in 11.24. Why is this is important? It's because for the United States, the federal government is trying to attack inflation. The only way it can attack inflation, because this is a weird issue, usually inflation is related to demand. Usually inflation is related to demand. But the problem that we have now in the United States for one of the first times is that we have way too little supply. The supply was hit by the pandemic. And so when you had manufacturing capacity go down, you have issues with manufacturing of chips that go into things like iPhones, computers, cars, and et cetera. That made everything go down. And when the supply went down, that meant demand went up. So what that happened is consumers wanted to buy things, and everybody had to raise their prices and make them more expensive, and that's what's been affecting the economy. And the problem is that people have all this money, people end up having excess money and capital that they can use to be able to make purchases. So that's causing, for a lot of people to basically raise prices for end consumers. So sadly, they need jobs to go down. Now, the Jobs Act, JOLTS report doesn't include any kind of farming industries. It's just basically more like blue collar jobs. So the fact that it came in higher probably means that NFP is going to come in higher, and that goes against what the Fed needs to happen. And that's why we had Jackson Hole last week on Friday. Jackson Hole Symposium, we had the Fed Powell spoke. Fed Powell had some very nasty things to say, according to some people, but it was actually just a reality check. as I like how Marco put it last Friday, is that the Fed is far away from their objective. They're going to raise interest rates. Interest rates means that the dollar is going to be stronger. So things like Euro USD should go further down when Euro USD is fighting to go up. And then you have any pairs with USD at the end are going to go are more likely going to go down every time there's a news report, because the information doesn't show that we're making any kind of substantial progress towards inflation or into demand dying down. So there's keys to note. Anytime you see job reports, like I'll look at this week, for instance, and show y'all. So anything with jobs, we have non-farm employment change, and just showing a change of people employed, excluding the farming industry and government. This is probably going to be higher. So USD is going to be strong. Pay attention to that during the beginning of the New York session. That's a key thing to look at. Another one to look at will be, for instance, non-farm. Average hourly earnings are probably going to go up. Non-farm is going to go up. Unemployment rate is going to probably either stay the same or go down. The unemployment rate is a good sign of, lack of job growth. That's right now around 3.5%. And with what the Fed is doing, it probably needs to be about 6%. So we need to see loss of jobs. We need to see more unemployment. We need to see inflation, the prices come down. And that's only going to come down if people can't afford to make purchases, which is what's happening because people are going through their savings in the United States, but also if they're losing their job, which is a sad fact of what needs to happen based upon what the Fed is doing. So I know that's a lot, guys. Let me know what kind of questions you have right now.
So one thing I want to know is, basically you're saying that if the unemployment rises, it deflates the inflation, basically. It reduces it. So does it mean it reduces inflation because less money is put into the market, or more money in a way is put into the market?
So the things that the Fed are looking at, they're looking at unemployment. If unemployment rises, that's going to hurt discretionary income that people have to spend. That means people won't afford prices of the things that they are now. And so for businesses to keep up, they'll have to lower prices. Right now, everybody, it's like, imagine you have a shoe store, right? And usually during the summertime, that's when kids go buy school clothes for back to school, right? Or going back to uni. And that's when you have the most business. So you raise your prices because things are flying off the shelves. But then when you get to let's say the winter time, and let's say it's a slow period, you tend to lower your prices to be able to incite people. Right now, the economy has been so hot because of people saving money during COVID, and now like people having the ability to go to shopping stores and such, that these companies are having to raise prices. Like, for instance, the cost of housing has gone up over 30% year over year. That's like a monumental change when on average it goes up no more than 3 to 5%. So if unemployment goes up, people have less money. People have less money, businesses will adjust. Businesses know right now people are flush with cash, and they're spending like there's no tomorrow. So unemployment is something to look at. Housing sales is another thing to look at. You can tell how healthy an economy is by housing, because real estate is one of the primary ways people build wealth. So if the home prices keep going up, that means that there's higher demand. But right now, there's something that you can look at, which is called housing contracts. You can see how many people cancel a pending purchase of a home. Right now, that's in double digits at 15, 16%, and it keeps on climbing, where a couple of months ago, it was only at maybe 3 to 5%. So that's also a sign that demand is slowly going down. So that's what the Fed is looking at to say, where do we start seeing breaks in the economy at, like, for instance, home sales and consumer pricing and, job loss, because that shows demand is hurting, because businesses don't invest when interest rates are higher. People don't buy when interest rates are too high. And so we're still at least a year out from them dropping rates. They're going to have to keep on raising rates until we start seeing like, for instance, unemployment get to 5%. We start seeing drops in job growth, or we see GDP negative for a whole year. That's about like how far off we are. And these market rallies are very funny because we're nowhere near reality like this.
Interesting. So what do you think the long-term perspective for EU to maybe get some upside should be? What should happen actually for you to at least start climbing up?
Yeah, let's look at that. Let me know if y'all can see my trading view chart.
Mm-hmm.
All right, cool. So, I mean, when you look at EU, right, I want you to pay attention specifically to a couple of things. I want you to look at, for instance, these candles. Oh, that's not the one I wanted. Where's my highlighter? Oh. So you look at kind of like these candles and look at how big in the bodies they are, right? Imbalanced candles, big candles. They have big, big bodies, and they really engulf the previous candles. Now, I'm gonna highlight something too. I'm just gonna keep on highlighting things on
Hey
which I want you
Brian,
to do. Uh-huh.
did you just start doing what you was doing? Because you answering my question about your daily approach, right?
Oh, yeah. I'm gonna
Okay,
do
my
both at the
boss
same
had
time.
called me. My boss had called me, and I'm like, I hope I ain't missed no good information. My fault.
Nah, you got it at the right time, brother.
Uh,
So looking at these candles, notice how there's lots of imbalance, lots of large size candles, and look at the direction. They're all going down, right? You can see that these were the strong drives that people had, right? Now I'm gonna flip it to the other side. I want you to look at all. Oh, that's not what I want to do. I want you to look at the bullish candles that we have that I'm gonna highlight in purple. And I want you to look at the average size and notice, well, probably not about right here, but notice how these drives go up, but they don't go up so far, right? They have lots of doji candles, wicks to the top and the bottom. And if you notice the average size, they're not as big as the candles going down. Would you agree?
Mm-hmm.
So looking at this, the drives and the data are telling us that price ultimately is being pushed down. Now, if you look at this last drive right here, we're going to look at this right here. Notice how we have wicks to both sides, right? We have wicks to the high, wicks to the low, and the bullish candles are not as high as the bearish candles, right? You don't have anything with imbalance. You don't have any large size candles. Clearly, price is trying to find a reason to be bullish, but it's very hard to. And then if you look at it where we're at parity as well. So the United States dollar is equal in value to the euro, which hasn't happened in a long time. You have to go back to somewhere around 2002 to find that the values were the same around this area. And if you look at it, it took a while for it to fight and break through, right? Before it went to 2003, and then price just took off after that. So this is a level that's being defended by banks. I like what Hussein had put in the group about the COC reports, because there's a lot of orders. So they're fighting for this parity. But you got to take into account what's going to give them the reason to keep buying. Well, they're looking at the jobs growth. The jobs growth shot the market down, and today's going to finish with a doji. Yesterday finished with a doji. Day before finished with a doji. Last week we had 3 dojis. They're obviously trying to buy, and there is a reason. They need a reason to be bullish overall, so that they can come back and probably hit, for instance, maybe this supply zone. But will we probably go through the supply? Probably not. We'll probably just end up going to react off maybe one of these 2 supplies that I have pulled. And so for that, like, for instance, the crazy part is I would have, for instance, for me on a daily basis, I have a daily bias that we're going to go this direction. But at the same time, it doesn't, for instance, weed out taking sales in the day. Both things are probably going to play out. Let's do it a bit too small. So that's like my directional bias, is that I'm looking at the market, and I'm going to take buys because I can see that there wants to be buys, but I haven't ruled out also that it wants to clear this low probably. So it probably wants to go through and take out that low down there. But for some reason, every time there's a news release, it knocks it down. So let's go to the market, then I'll show you. Once I have my bias, Then I start approaching the market for the day and try to find things aligned to my bias. So you have, for instance, here was a demand zone that the market reacted off of. This was today. And so here was my demand that I looked for. I didn't take a trade on EU because I took a AU trade right here, but that was one area I would have looked at. Then I had a second area right here. Once this broke with imbalance, that means that was a strong move. And it also took out the high from last week. I said, okay, this would possibly be another area. And this would have been the second place I would have looked in for a trade opportunity. As for instance, the market, came back into this area. But now take a look at these news releases. This was the jobs report. Jobs report, like I told you, came in very strong, right? So price ended up going straight down. You could have taken a sell there and won. I think that's what Rob did as well too. And so, for instance, this is another area I had looked at because it had some semblance of imbalance here. But I would have looked at, for instance, taking a buy here. Obviously, that wouldn't have worked. We had the news come in. And so here, this demand zone was broken. For me, I want to see it clear this low. So I would have drug in this demand zone all the way from here to here. Once it would have crossed here, then I would have said, okay, here was the supply that broke this demand. And so you could have had taken a trade here and sold, while also if you had a bias for buy, you could have taken a buy here and bought. Both of them would have worked. Because right now, really, if you zoom out, and I'm just going to go to the 4 hour, because I think 4 hours showed it best. We really haven't left this range. So this is pretty much like a resistance. And this is pretty much like a support. So, I go to a line chart. Price is really maneuvering over here because it really wants to get some type of thing to possibly go bullish. But as you can see, it's not really a convincing bullish movement, but it's trying to. Does that make sense?
Yeah.
So there's some type of catalyst that needs to happen for us to see a jump in price to leave, but we're not going to go very far because we're either probably going to hit maybe one of this daily zone or maybe even this daily zone. And price, I would kind of expect for price to follow what it's doing from a market structure standpoint to go do something like this, either here or here, especially when you add in the energy crisis of Europe, which that's going to sink the economy. You have the dollar. The dollar is trying to get weaker. So as we get data, for instance, that job growth slows, or we get unemployment going up, that's going to send EU up. But then when we get information like inflation coming higher, or we get, for instance, the Fed hiking interest rates, et cetera, that's going to push EU going down. So you got like this whole thing between different market conditions in different countries and different issues that's all battling out. And you can see this being played out by hesitancy in the market for the market to move one direction or another. So. But from a weekly standpoint, we still haven't made a new lower low, but we're hovering here. And it's probably going to take a couple of weeks for us to even get up to here. And we still have a strong bearish movement. So we're really needing some type of catalyst to help us make a move one way or another. But essentially every day, that's how I approach it. I come here, I look at market structure, I decide, all right, what am I doing from market structure standpoint? Lower high, lower low, lower high, lower low. So now I'm expecting something like this to happen from a market structure standpoint. So at least I know I'm looking for buys. I come into my 15-minute time frame, 1 hour time frame, 30-minute time frame, and I seek to find wherever my POIs are. And I set my alerts, like the one you see right here, these orange lines. And when price comes into my zone, that's when I go look on my 1 minute time frame or whatever time frame I'm using for entries, and just look to see if I see the reaction I'm looking for to show momentum in that direction. Does that make sense, Josiah?
Eh, sorry, just one question. So
Mhm.
you won't be taking any trades at the current levels? You'll wait, or if you were looking to take a trade at the current levels, what will be your bias?
Well, my bias is still going to be biased. I pick one bias and I stick with it unless I have a legitimate reason for changing that bias, right? So for
Okay.
me, the thing that's going to change my bias is us tapping into one of these supply zones. And then I got to
Okay.
also see the second part of it is that just because we go into the zone, that's not enough for me to change my bias. I need to see confirmation of a structural change or supply, or I need to see, for instance, supply and control in this case. But for right now, I know that one, we're in this range. We're in a very ranging area, right? But I'm
Yeah.
still going to keep with my bias of buys. Like I would have taken this one, but I already hit my trades for the day. So I didn't need to take any more trades. But there was a perfect entry that I saw here that I would have taken on EU had I needed one more trade for the day.
Okay. Thank you.
Mm-hmm.
Thank
So
you.
tomorrow morning, nothing's going to change. Nothing substantially is going to change with my bias. So tomorrow, I'm still going to be looking for EU buys until we get into one of these two zones. That's my requirement for changing my bias. So I'm going to wake up. I'm going to look to see, all right, where is there a demand zone that is relatively hasn't been used, right? This one had only been used one time. So I could still continue to extend this out. If it taps into this, I would consider it. Whereas here, I didn't try to take this trade because we had 3 taps, and after 2 taps, I don't look at it, right? So this is tap 1, this was tap 2, and then this was tap 3. Largely though, tap 2 and tap 1 also came in during a holiday. So
And I
really.
will like to ask you if it's okay with you. What's your trading plan strategy in regard to the stop loss? Do you usually move to break even, or you hold your initial stop loss level? The question being, I take a buy yesterday on EU around 10083, and so 13 pips later I moved to stop loss just to find out when I woke up that my level was taken, and then all the move I was expecting was done. And today I take again that trade, but move again too soon to stop loss. So as you have a vast experience, I would like to know if you can share it. What's your decision on moving to break even or holding the stop loss level?
I mean, I don't do anything too special. I do the same thing as Rob. So let's say, for instance, you take your trade, something like this, and you get in with your trade like this, right? I do 2 things. Well, I do whatever comes first, right? So the first thing I look at is where's my first BOS. So
Okay.
this would be where I move my stop loss to break even. This would be a break of structure. Now, it doesn't have to be swing structure. It can be external supply and demand. I just want to see a higher low. I want to see a higher low go. Where the first higher low goes, I move my stop loss to break even. Or
Okay.
if I'm in 2R, my stop loss is automatically moved to break even. So as soon as I hit 2R, like if in this case, I would have hit 2R here, my stop loss would have moved to break even. So it's whatever comes first.
Okay. Thank you. Thank you so much.
Mm-hmm. So, and then if you use lower time frames like seconds, I use seconds. So when I'm on the seconds, it's for me 2 breaks of structure. So I would have looked at this, if I was on the seconds, I would have said this would have been 1 right here. This would have been that would have been 1. This would have been 2 for me. I know it's really hard to see, but this one was actually broken by this candle. That candle was broken by this. I would have moved my stop loss at that point right here. That would have been just 1 hard, but I would have moved my stop loss to break even. So, but pretty much
Okay.
a lot of us do the same. I don't take partials. I don't like partials only because it lowers your risk to reward. So like, for
Mhm.
instance, if you take off, I do think it's smart though to do something like partials because that secures some part of your trade. And at the end of the day, guys, it's not about being right. I don't care about being right. I don't care one bit about being right. All I care about is doing things that are profitable, because sometimes we can get in the habit as traders as we want to be right. And so I'll give you a primary example. Let's say, for instance, you took a trade right here, right? And say you put your stop here, put your stop behind here, right? Price goes up and you say, well, this high has to go right here. So I have to make my profit target this, right? And you're already up, 5R at this point. You crossed over, you broke even, but you decide to let it hang out, let your trade hang because it didn't reach exactly all the way where you thought the price was going to go. Man, if you read the market, this is consolidation. Price is dropping back. At this point, you hopefully would have wanted locked in something. So if not, you would have come and just taken a loss for a trade that you should have at least broken even on. But at the minimum, you should have been able to make something, right? So you definitely want to make a plan that says, okay, at a certain point, I do something, right? So like at this point, I definitely would have had at 5R and we're up. I would have looked and said, okay, looking at the time of day, it's after kill zone hours. It doesn't make sense. While this may go, it just may not go today. So I would probably closed out my trade here instead of being so rigid and saying, well, it has to go this, because what would happen is price tends to consolidate. And if you happen to know about the cycles of the market usually starts the day in consolidation. It does a manipulation move. It then distributes in the price and it ends the day in consolidation. That's just the cycles of the market. So I'll give you an example. This was the Asian session right about here. You have this part right here. This was the Asian range. That's right here in this teal color. The liquidity was wiped. Price manipulated people. Price took off. Price comes back. Price ends the day right where it starts, the same way, in consolidation. So focus on making your rules. Make your rules so that you don't get caught. Oh, wait. Why am I session indicator? Hold on 1 second, guys.
Sure.
I'm about to say, I knew it was bigger than that. This was the Asian session. There we go. That's the Asian session. Manipulation, people thought to sell. They took off in the buy. People sold, come back and buy, and it ends the day in consolidation. So, but when you make your rules, guys, make your rules so that you find what's profitable for you. Don't be so rigid in what you're thinking that you do things that are not, that force you into ego, because the worst thing you can have in trading is ego. You can have an opinion about what price is going to do, but price is going to do what it chooses to do. It doesn't care about your ego. So I hope
Thank you. Thank you. Yeah. And just one more question.
Sure.
How many trades do you usually take in a day? And when do you say enough? If you have a bad day, you go forward and trade much more trades than you usually do, or you just make one trade and stop. Don't minding what the result or decision was for you.
If I take 2 losses, I'm done for the day. If I do 3 break evens, I'm done for the day. And if I have 3 trades that hit my target, I'm done for the day.
Okay, thank you. Do you usually trade London or New
Yeah.
York?
Mm-hmm.
London. Okay.
Mm-hmm.
Thank you.
Yep.
So do you use imbalances?
Mm-hmm.
Can you go to 4 hour? On EU?
Yep. Mm-hmm.
So would you consider this as an imbalance?
Mm-hmm.
So what do you think about price doing something like this? We take out these buyers and then we kind of pull to that supply that you were targeting.
Yeah, I could see that. I mean, like I said, this is all a consolidation. So right now it could go and play all in this range. And like you notice, like I drew the line, it could do all of this for as long as it wants to until it decides to go up. But it hasn't really left this kind of range at all. It struggles every time it tries. So that's kind of the reason why I'm just kind of like iffy about staying in. That's why I made the comment. I'm like, I don't know if I'll continue to trade EU because I really want to see it break this. I want to see it break over. Oh, delete the resistance line. There you go. But yeah, I wanted to break out of this little range before it makes some type of move because it's basically just hovering around in this same little area. Like all of this is just one big consolidation. It goes high, comes back, goes high, comes back, goes high, probably will come back. And then when you see it start breaking and get into over here, when I see it kind of in this range right here, this is where I would like to trade going up. So that's my hope for EU. But hopes and wishes have no place in trading unless you want to just burn money. So
yeah. One more question for my side.
All right, last question, guys.
Yeah, sure.
Sorry, guys. Last question.
No. Thank you. Do you have a particular range of hours to trade London market?
Yeah, I mean, I get up 2 hours before the London starts, 1 hour before Frankfurt. I don't take any trades until either Frankfurt starting, and then I trade London. Well, I trade London into New York, so.
Okay. Thank you.
No problem. All right, guys. Thank y'all so much for questions. Y'all had a lot of questions today, and I would continue on, but I got another call with somebody who reported that I got to hop on. So I wanted to say, if you didn't get your question answered, don't hesitate to go into the question section with Discord and feel free to ask us our questions. Also, if you haven't signed up for Thursday's Power Hour with Rob, and so it's also our other time where we have visual kind of storytelling to be able to talk about charts and such. He'll do a midweek market review as well too. So you can either hold your questions up there, and if not, guys, don't forget you can always sign up for one-on-one coaching with us. We have breadth of knowledge that we can only get into when the right questions are asked. So we try to share as much as we can, but a lot of things end up occurring in the moment, especially when you get the one-on-one time with coaches like us, like Rob, Nathan, or myself, and any of the team. Like we're able to go so much more in depth in a one-on-one hour phone call that will leave you with all kinds of information that you'd never even imagine, or even things you hadn't even thought of asking. So definitely sign up for one-on-one coaching with us. You can find it in the coaching tab in Discord. But Rob will let us know, everybody know once this recording is up online, and y'all can replay it for the next 48 hours. So guys, I will catch y'all on Discord, and I wish y'all the best on the trading week and chat with y'all in a second.
Thank you very much. You were very kind. Bye-bye.
Thanks, everybody.
Thanks, Brian. See ya.
Thanks, Brian. See ya.